China controls 90% of the tech supply chain, and in June they weaponized it by banning the 2 American companies built to challenge them. But the Pentagon already made its move, dropping hundreds of millions to buy a stake in the supply chain. With critical metal prices up over 70%, this is no longer a trade war, it's a resource war. So by the end of this video you'll know exactly what's being fought over, why it cannot be replaced, and the 3 companies caught right in the crossfire that have caught my attention. So what exactly is this supply chain everyone's suddenly fighting over? It's a group of 17 elements called rare earths, names you've probably never heard of, things like neodymium, praseodymium, dysprosium, terbium, and many others I can barely pronounce. And here's the part most people get wrong. They're not actually rare in the ground. They're scattered almost everywhere on Earth. What's rare is the ability to separate and refine them into something usable. That's not by accident. Refining these elements means pulling them out of ore that's naturally laced with radioactive thorium. For every ton of usable rare earths, you're left with more than a ton of radioactive waste to deal with. That's expensive, it's heavily regulated, and for decades most countries decided it wasn't worth the headache. China decided it was, and right now, that country controls almost all of that ability. I know what you're picturing, some niche industrial commodity that shows up in a spreadsheet nobody reads. It's not. Every electric motor needs these elements to make its magnets. A single F-35 needs 920 pounds of them, a destroyer needs 5200, and a submarine needs over 9000. Every Patriot missile needs them too. Wind turbines need them, and now there's a new source of demand entering the race. Every humanoid robot needs dozens of actuators, and each one runs on the exact same neodymium magnets an EV motor uses. It's still early, but if Tesla hits even a fraction of the production numbers it's talking about, robotics could end up needing as many of these magnets as EVs do today. So we've got defense, EVs, and now robotics. 3 of the biggest industries on the planet, all pulling from the same narrow pool of elements at the same time. What do you think happens to a resource when everyone suddenly needs it at once? It gets expensive, and whoever controls the supply gets leverage they've never had before. That's the setup. Now let's talk about how one country ended up holding all of it, and what they just did with that leverage. It didn't happen overnight. China's been tightening its grip for years, but the pace picked up fast. Back in 2023, they started restricting exports of the technology used to separate and refine these metals, not just the raw materials. Then, wave after wave, more elements added to the control list, tighter licensing requirements, longer review times, and by early 2026 the list covered nearly every rare earth element that matters. But here's the thing about how these controls actually work. It's not a blanket ban. China doesn't need one, they just require a license for every shipment, composition certificates, and use disclosures, the works. And those licenses can take 45 days or more to review if they get approved at all. In this game, delay works just as well as denial, and the price chart shows exactly what that pressure looks like. The core ingredient in nearly every one of these magnets is up over 70% in the last year alone. Some of the heavier elements have moved even more, and there's a clock on all of this. As part of a trade truce, China agreed to pause its toughest rare earth restrictions for 1 year. But that pause runs out on November 10, 2026. Unless it gets extended, the rules snap back. What do you do when one country that controls your supply chain starts squeezing it, element by element? If you're the United States, you don't wait around. And in July of last year, Washington made a move nobody expected. It bought a 15% stake in a public company, $400 million in preferred stock with a 10-year deal locking in a price floor, nearly double what the market was paying at the time. Not a grant, not a subsidy, an actual ownership stake with the government positioned to become the company's largest shareholder. And it didn't stop there. Apple put up its own $500 million, a separate deal prepaying $200 million upfront for a supply of recycled magnets starting in 2027. GM signed its own supply agreement too. All betting on the same thing, that America needs a source for these magnets that didn't run through Beijing. And here's the part that tells you everything. In June of this year, China looked at the 2 companies leading that effort, the ones specifically to break its grip, and sanctioned them by name, blocked them from receiving Chinese technology and equipment. Both companies said the direct hit was minimal. They'd already been cutting Chinese ties for over a year, so why bother? Because sanctioning your rival, even when you've got almost no leverage left over them, sends its own message. China didn't sanction a random company. That's not the move of a country that thinks this problem is going away. So now we've got the 3 biggest industries on the planet racing to secure a resource one country still controls, and the government willing to become a shareholder to fix it. That's the setup. Now let's get into the three companies caught in the middle of this. And these are three different points of entry into the same race. MP Materials is the one already producing. It runs the only large-scale mine-to-magnet operation in the entire Western Hemisphere, and it's the one the Pentagon actually bought into. The $110 a kilogram price floor. The 10-year offtake, the government as a shareholder. Add Apple's $500 million and GM's supply agreement on top, and you've got a company with revenue locked in regardless of what the commodity price does. And the validation keeps stacking up. Just last week, the company landed a reported aerospace deal, adding yet another customer to a list that already includes the Pentagon, Apple, and GM. And the chart just backs up all of those claims, all of those expectations, because we are looking at a stock trading at $57, whereas 2 years ago it was trading at $10. We have an active uptrend with a complete 3-wave correction in place. I'm looking at a structure where this wave down formed a 100% extension of the initial decline. I'm not saying it's complete because we have a wave C in this decline. I'm saying it is complete because we have already broken resistance that would have allowed this structure to still extend into a 5-wave pattern completing a wave C. At this point I would have to assume this developed as a wave Y, but even in that case, the structure looks complete. It doesn't seem keen to extend even lower. It reached perfectly the 100% extension of the wave W, and we are looking at what seems to be the beginning of a larger uptrend. And let me remove some of this. I'm tracking from the lows here around $38. An initial 5-wave move to the upside. It is true that this structure could very easily still extend higher within the white wave 1, but I do not believe it to be necessary. It might be slightly more preferable, but even in that case, I wouldn't expect a strong push past the $62.5 level, as we have some additional structural resistance, and this structure, this move up, does seem to be on its last legs. So what I am looking at is a potential initial 5-wave move to the upside. I am looking for a 3-wave correction into the area of support, and from these levels, I'm looking for at least another 5-wave move to the upside that would ideally turn out to be a larger wave 3, but at the very least, this would be a wave C. So in either case, we are looking at a quite compelling trade setup, except it's a bit early. And even if it were the right time, I wouldn't be telling you to buy this. You should do your own research and you should come to your own conclusion. But what I am looking at is a company whose fundamentals are just brilliant. I'm looking at a structure that is suggesting a low risk, high reward setup. What I do know is that this level, $38, the beginning of this supposed wave 1, cannot be broken under any circumstance. If that happens, the doors to much lower prices would have been opened, and a new price floor could be discovered in that case. And that's the anchor, the one already validated by 2 governments and 2 of the biggest companies on Earth. But the anchor isn't the only way to play this. USA Rare Earth is the sprinter, its earlier stage backed by a $3.1 billion in capital raise. Part government funding, part private investment, still building toward first production at its Toronto project. Less operating history than MP, with more of the story still ahead of it. And it's the other company China named directly in its June sanctions. This tells you Beijing sees it exactly the way the US government does. Its Stillwater, Oklahoma facility, meanwhile, is set to become the largest metal and alloy magnet making operation outside of China. This is barely an uptrend. We are looking at something interesting within the smaller time frame. But if we are to stay on a larger time frame perspective, this is pretty much a purely fundamental play. We only have 3 waves up from the beginning of this entire structure, and we aren't looking at something particularly suggestive of being complete, even in a correction. I wouldn't have an issue with considering this pattern actually complete and it capable to extend higher, but there is a very good chance it wouldn't be capable to generate the desired impulse we would typically like to see. Does this mean that we cannot look for a setup? No, not by any means, especially as within the smaller time frame I'm looking at a structure that is even more so a potentially complete initial 5-wave move to the upside. I'm looking at the same setup on a different chart where the potential is much higher, but so is the risk. However, as long as we know that we would not see a break in this setup below the beginning of this entire move 1, which is right around $13 in that area, we could be looking for a position in this white region of support where we have a defined risk. If I am to buy at the 78.6% retracement, let's say $14.30, I have my stop loss just below the beginning of this entire structure. I'm looking at a capped risk. I'm looking at a potential to gain from this level, let's say 100% of this structure in the case of a wave C. This type of asymmetric risk reward allows even someone without 50% win rate to be highly profitable. Now, allow it to become a wave 3, which is a possibility. We could be looking at it to extend from about $14 maybe to $25, $28, maybe it tops around this region, this structural resistance we have right around $25, $26, and we are already looking at a near 2x for the potential loss of, what is it, maybe 10%? Yeah, that's quite promising, and yeah, that is something that could be considered, not financial advice though. And before we move on, one key difference compared to MP materials. In the case of this structure, we have seen the 50% retracement broken, right? This move up, this rally, did get over it, did break it completely. But unfortunately, not all levels of resistance that would prevent this from becoming a 5-wave pattern down have been broken. This could still work out as an ending diagonal, and especially since we only have 3 waves up here, we have seen a deep decline, there is a very good chance we will see that additional extension lower. Does that mean that the setup cannot work out? Absolutely not, and I do still prefer this wave 1 in white to be a 5-wave pattern, which would suggest continuation higher instead of a failure. Ultimately, yes, this is a higher risk play, and it is apparent within the structure as well. So that's higher risk, higher reward. The third one, however, flips the setup entirely. Energy Fuels is the one building differently. And you may be confused. This is not a rare earth play, this is a uranium stock. Yes, right now it's a uranium company. Its revenue, its cash flow, all of it comes from uranium. But it's using that balance sheet, nearly $1 billion in working capital, to buy its way into the rare earth chain from the outside. 2 acquisitions, one closing this month, one worth almost $2 billion closing early next year, aimed at building a fully integrated supply chain from raw ore to finished magnet. The payoff is further out, 2027 and beyond, but the VAC acquisition alone brings something remarkable with it. VAC already owns the largest rare earth magnet facility in the United States in Sumter, South Carolina, with plans to scale its capacity 6-fold by 2031. And for this stock, we aren't even looking at the larger time frame yet. I will mention though, it's not exactly ideal. It is within a larger correction that we have found this bottom, and the correction could easily extend lower. But if it manages to follow the white path I have laid down here, I believe it's capable to generate the same setup as the other opportunities I presented here today. So I'm looking at this structure to generate an initial 5-wave move to the upside. For this, I would like to see an impulse develop. It's not a necessity, but only as long as an impulse really follows through here can we really have a high conviction. So what I'm looking at is for the current development to extend within one additional high, completing this white wave 5, completing the larger white wave 3. This would then become an extended wave 3 in white, and we would expect a 4th and a 5th to complete the larger pattern. And by the end of this structure, I wouldn't be surprised to see the $18 level be achieved. It would pose a significant resistance level. Yeah, it is the beginning of this entire decline, this major decline. And it would be a perfect place to complete our larger wave 1 within a 5-wave pattern. And what are we really looking at right now? Well, I'm looking at a 3-wave correction to form within this white wave 4. I expect the 50% retracement to not be broken, $13.50, and if it is, to only have a brief break while not reaching the territory of the wave 1. If it does, this structure would have failed, this idea of an impulse would no longer work out where this would have been an actual wave 3, and only less likely interpretations could still really follow. I'm not saying something even more bullish couldn't happen, but the risk would have significantly increased. Then we already have what could be considered a wave 4 in place. It has reached the 38.2% retracement, which is the ideal target for the wave 4, and it has already seen a satisfying enough reversal. So far, we only have 3 waves up in this reversal, but if it forms here a 4th and a 5th, it could have an internal 1-2 setup in this area, right? A 1 and a 2 to follow, before forming a larger wave 3, and a fourth and a fifth to complete this wave 5, completing this larger wave 3. So this is probably a more near-term opportunity, but it is within a very small time frame, and the risk of failure is significantly higher within such time frames. Now, if it manages to follow through fully and build that initial wave 1, we will have identified for ourselves a much more compelling setup, but that is for a much later point in time. Now, with all of these bullish fundamentals in mind, before you get too far ahead of yourself, there is a real risk worth naming here. Both Tesla and BMW have been trying to build electric motors that don't need any of these elements at all. Tesla pledged back in 2023 to eliminate rare earths from its next generation drive units entirely. 3 years later, that's still just a pledge. No rare earth-free Tesla motor has actually shipped, and Musk himself admitted China's exports controls disrupted Optimus production, which tells you how real the dependency still is. But if that kind of substitution technology ever does work at scale, it changes the entire equation here. The bet isn't that alternatives are impossible, it's that they're not coming fast enough to matter for years. So we have the anchor, the sprinter, and the compounder building the same thing from a completely different starting point. 3 ways into a supply chain 2 governments are now openly fighting over. I'm not going to tell you which one to buy or when. These are high-risk, still developing companies in a sector that can move fast in both directions, and this isn't financial advice. What happens from here is genuinely uncertain, but you've got the full picture now. Why this matters, who controls it, who's fighting to change that, and exactly where each of these 3 sit. What you do with it is up to you. And for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.